Mary Jane, do you want to introduce while I can just have a quick drink because I've been running?
Sure. So welcome everybody to our regular fortnightly or so Q&A. Cass and I will answer any questions you've got relating to self-managed super funds or estate planning or property or tax or anything you like. If we can't answer it, we'll let you know. So it's really free, open question. There's no format. If you want to ask a question, you can if there's a lot of people already with their hands up, then you just put your hand up and I'll call you. If for some reason your microphone is not working, then you can put the question in the chat and I will read it. If no one's talking, then just feel free to jump in and ask a question. We answer questions for about an hour, and sometimes it goes right up to the hour, and sometimes it only goes for half an hour or 45 minutes. It depends on the questions. So if you've got a question, you can click to raise your hand or first in best dressed. Erin, you've got your hand up.
Hey there, how's it going? This is my first time, so hopefully I'm asking the right question or whatever. I've got a bit of a specific circumstance with my personal taxes because my parents put a house in my name when I was 18 or so. So I missed out on the first homeowners grant. But I was just wondering what that kind of means for me buying a house in the future, and also being in a partnership with someone who also has property and what that means for us in the future, buying future property purchases together.
Okay, so property portfolio planning is really specialist area.
Cass sometimes freezes. She's in rural Queensland at the moment, so we'll just. Cass, you just froze.
I'm back again.
Yeah.
Don't know where I left off there, but it's probably outside the scope of a free question and answer. But I can say the fact that you've had a property before and it's on your tax return doesn't have any effect on you buying a house at all. As far as taxes are concerned.
And
can you hear me, Erin?
Yeah, I can. I was wondering, because I've never really claimed it on my tax return before, but I'm wondering if I should. And because my parents still live in the house and they've...
You'll probably, if you do, you'll end up with a massive tax bill, so it's up to you.
Yeah, well, that was...
Sorry, I'm with things.
Yeah, that's wanted to ask, like, is it better for me to put it on my tax return or not in terms of what I can get back?
Yeah, okay. So firstly, you won't get anything back. You'll get a bill. Probably a substantial bill if you do it for a number of years. You don't get anything back because you've got a property. Only way you get something back is if you have a really high mortgage on it, which I'm presuming if your parents put it in your name, you don't have a mortgage on it. So you'll get a big bill. You'll get a big bill if you put that on your tax. It may help you get a bank loan to have a higher income. And if that's the case, I've done a lot of mortgage broking, so I know that yes, you could put it on your tax return for 3 years, pay a big bill, $20,000, $30,000 perhaps. And then you may be able to get a loan for the house a little bit easier because your income's higher, but you've then got a big tax bill. So it's always a catch-22 between putting income on your tax return versus, so you get a loan versus the tax payable. I did overhear you say your parents are in the house, is that correct?
Yes, so we don't have an income from it.
Yeah, so that's good because the tax office are quite lenient, or last time I knew, the tax office are quite lenient on that because it's like a private arrangement. So they sort of don't push for you to put it on your tax return. But if you did, or if they forced you to put on your tax return, they would put it at market rental regardless of how much your parents are paying. So that could be like $500, $600 a week rent going into your tax return and you get a big tax bill.
Okay.
My thoughts to you, as I said, you can book a private consultation where we can drill down a bit further, but my thoughts to you would just be just don't even think about that any further.
Okay, cool. Great. Thank you, Cass.
No worries.
We've got a question in the chat from Tanya. And it says, thank you for your assistance. I'm wondering if the super could be rolled into a private trust as opposed to a business trust. I'm going to first assume that you're talking, well, there are two possible questions you're asking here. One is, are you talking about a company trustee versus an individual trustee? If you are, then the answer is yes, you can do either. Business trustee, it's actually a company trustee structure as opposed to an individual trustee structure. We generally suggest, and most of our clients do, a company trustee structure. But if your question relates to a private trust, which is a very different thing, versus the actual formal self-managed super fund structure, then we don't do that. I don't know if somebody else does, but I have not heard of anyone successfully getting their super rolled into a structure other than a formal ATO recognised self-managed super fund structure.
Okay.
Does that answer your question?
Yeah. Look, I don't have a private trust. It's something I've been looking into, just to protect.
Can I make a suggestion there, and I will put it out there to anybody who asks me, and to save you booking a private appointment for me to tell you, all the people out there selling private trusts for absolute fortune, it's, in my opinion, I'm going to get hunted down one day, load of crap. You're wasting money. They are ripping you off. I can do you a private trust if you want for $220.
All right.
But
Wow.
it's not going to protect anything. It's not going to do a thing for you. The UN come knocking on your door to confiscate your property, and you go, oh, no, but wait, look, I've got a trust. It's a lot of bullshit. It's not going to protect you in any which way. And I'm wanting to put out a video on this topic because it's really pissing me off what these people are doing.
Yeah, there's
I'm a bit
quite a
fiery
few.
today. I should warn everybody that I went and had a huge amount of pre-trainer at the gym and lifted weight. I didn't quite get it all out. I've had a hell of a morning, a bit shaky and jittery. So if you want honesty, you're going to get it today. If you don't want honesty, don't ask a question.
Yeah, no, fair enough. That's great. That's all we want. And yeah, look, there's quite a few different ones talking about private trusts, protect your stuff and all that.
And I'm happy to give anyone a paid consult, save you $10,000, have a private consult with me. It's only $200, $220 with GST. And I'll give you the truth about trusts. There are times you use them. I have used trusts for 25 years. I wrote my tax office master's thesis paper on trusts 22 years ago. I had all my properties in a trust, even my own home in a trust. There are reasons to use trusts, but as for using them to protect you against what's coming down the line, no, they're not going to do anything. So yeah, you want an opinion on whether to use a trust or not. Firstly, I'll save you some money. Don't even bother with the consult with me if it's about putting your private home in a trust.
Right.
Don't do it. I only did it for really specific legal reasons that wouldn't apply to 99% of other people. If you put your private home in a private trust, firstly, you'll be up for stamp duty. 20, 30,000, whatever your house is worth. You can Google on the Office of State Revenue website, whatever state you're in, see what stamp duty. It's a transfer from you to the trust. Stamp duty payable. Second thing, you lose your capital gains tax exemption. So now all of a sudden, you sell your home 5 years later, you have a massive tax bill from capital gains because it's in a trust. Whereas if it's in your private name, you won't get that bill. That's a $20,000, $30,000, $50,000, $100,000 problem. Thirdly, if that's not enough, you'll now be liable for stamp duty. Depending on your state, in Canberra, I get logged, and it's probably gone up now. Last time I looked, an extra $14,000 a year in land tax because I've got my home in a trust. Does anyone still want a private home in a trust? Because when the UN come, it's going to help you.
Very
Okay?
good.
Do it. It's going to cost you hundreds and hundreds of thousands in excess tax.
Yeah, no, well, I'm mainly on here about super and getting, and I've been doing a fair bit of reading of what's on your site. So I think that was the only really question that I had. Yeah.
That's good. If you talk about super, that'd be good because then Mary Jane can talk and I can just sip my tea and calm down.
Well, Kent, you're up next. Have you got a question about super?
I have. Can you hear me all right?
Yes.
Excellent. Yeah, just getting, I've seen that video last week of the ABC bullion and the fraud that's going on there. And I was thinking about anyway, getting my gold silver out of the vaults and keep it somewhere closer. And the accountants come back and basically said every year we've got to do an audit. We've got to confirm I think the wording is it's got to be a competent, independent person. It's got to make sure that we've got everything still there. Now, some of it's in super, some of it's in our own personal stuff, and some of it's in the company stuff. So we've got 3 different lots. Yeah, so my question is, what's the deal with these audits? Are they fair income?
I'd like to start this, and then Mary Jane can add. Change accountants. Freedom Financial Superannuation Solutions, you won't have any problems.
Because they
are completely wrong. You are perfectly entitled to keep it at your house. I had this argument with my auditor 14 years ago now when I first bought gold and silver and put it in my house. She said, you can't do that. And for those of you who don't know, I've actually got a master's in tax law. And so I went straight back to her and said, can you show me the legislation that says I can't do that? Or any ATO guideline or any ruling or anything that says I can't do that? And she says, there isn't any. And then I said, therefore I can. And I have been ever since, and 99 or not probably 90% of our clients at this stage store it at home. So all we get our clients to do is at the end of the year in the financial statement, there's a declaration that just says I'm keeping it somewhere safe. As trustee of the fund, I declare it, I'm keeping it somewhere safe.
Do we have to have insurance? She's saying here that
you don't have to have insurance, and the auditor does not come and cite it. Nobody comes to cite it. You just declare that you've got it. Sorry, we do need a photo of it every year. That's all.
Yeah, she said I could also be sued for any breaches if it gets lost or all this sort of stuff. So your typical scare tactics.
Yeah, that's true. But you do need a photo of it every year on July's newspaper or magazine to say that, July 2025 got it.
Yep. Sounds good. Okay. Thanks for that. I'll sack her. She didn't even know about the bail-in laws when we asked her about it 2 years ago. She said, what's that? And I said, sure,
that's why,
she did
that's
check.
why a lot of people are coming to Freedom Financial Superannuation Solutions because, we are just accountants. We do accounting and financial and tax and all of that. But we're open-minded accountants. So when you talk to most of our staff, we know what you're talking about. We're all on the same.
That's what I want. Excellent. Thanks for that.
I've put an email address, mika@freedomffs.com.au. Someone's coughing, that's normally me. If you wanted to on board with us, then you can email Mika, or if you want to sort of start with me, my email address is also in the chat there, and I'll just say hello, and I'll maybe if you've got questions, I might be able to help, but otherwise Mika's the one who does the onboarding to help you. So you've got an SMSF. I hear you've got a personal and company tax as well, accounting as well. We can help you out with all of that.
Excellent. Thanks, Mary Jane.
It's okay. Erin, you again, if you've still got your hand up.
Yeah, I've got a few questions, but I'm happy to kind of, obviously there's lots of other people here, but so I've got cryptocurrency and I invested in it a few years ago, but then I changed the coin a couple of months ago, and I was wondering, I'm just kind of wondering about tax because I'd like to probably take it out around, I'm guessing possibly around like June, maybe May, June next year. And I'm just kind of wondering what's the best way to kind of avoid tax around it, or how I can move it from my hard wallet to fiat.
Yeah, okay. That one is one I don't have a nice little escape route for. The ATO are onto Bitcoin and have been for quite a long time. You don't pay tax on Bitcoin until you sell it, and then you pay on the gain. You will need to return that, or they'll catch up with you most likely 2 or 3 years later and levy penalties. So just get a good accountant. We're good accountants to do that tax return, because there certainly are things we can do to reduce capital gains. like you can put a contribution into super and things like that. So when you're ready to sell it, book an appointment and we can advise you on how to reduce the tax, and we'll go from there.
Cool. Thanks, Cass.
That's Katja, your turn.
Yes.
I
Yeah.
accidentally raised my own hand. I will lower it. Yes.
Hello. Hi. Thank you. Yeah, I've got a few questions as well, but so here we go. Just quickly in regards to the reimbursing of the fees. So I've literally just got the money through from the account. So thanks for all your help. So I've paid your invoice fees. So I'm assuming the next step is that I get that engagement letter, which hasn't come yet, but I think that'll come after I paid the bill. I take it.
So this is your Prothero, are you? Sorry.
Yeah.
Yes.
Yeah.
So I think we're still waiting on one rollover for you.
Oh, I see. Okay.
So
Yeah.
we
So
won't
that's that
issue-
little one. Yep.
Yeah. And thank you very much for settling your bill. And if your question is how do you get your 660 back, you just go into your Macquarie bank account and do a direct payment to yourself from your super funds.
I did that just as per the FAQs. I couldn't even fit the whole description into it, so I just did what I could. Is that all I need to do? Like I've got an email receipt that I've emailed to myself and I've filed that in a folder. Is that all I need to do as far as keeping records?
Yeah, that should be fine. And if it's not, because up until now, that's fine. But sometimes things change. So the accountant who's designated to you, once you come on board, will let you know. But for the time being, that's absolutely fine.
Okay, fantastic. And the other thing is, so I'm obviously looking into the precious metals and also crypto. And obviously I'm going to need my SMSF name, which Cassie was saying in the video, it's just the name that's on my bank account. Now I'm looking at my Macquarie bank account statement, and it's got the account name as K Prothero SMSF Proprietary Limited ATF K Prothero SMSF. So which part of it is actually my name that I need to put on my investments?
We usually suggest putting it all on. It makes it very clear. So what it is it's talking about the trustee, which is the company trustee. ATF stands for as the trustee for, and then there's the super fund. I mean, you can just write the super fund name down, but it doesn't hurt to put the whole kit and caboodle in.
Because isn't my super fund name just K Prothero SMSF?
No.
No?
No, it's the whole thing. It's the whole legal name.
Wow.
The company proprietary limited as trustee for the super fund. So on all legal forms, list all of that, even if you've got to like stretch it into the the bank may change it, or whoever you're dealing with may shorten it to one of either names, but that's up to them and their protocols.
Yep.
You give them the whole name, that way they can identify it properly.
Okay, cool. I just wasn't sure if I was missing anything. So basically just stick to the Macquarie Bank statement whenever I advise the name.
Yeah, they've got the full name on the Macquarie Bank. Just a little aside, which is kind of interesting and curious, and I don't think the ATO's fixed it yet, but in the ATO field where we have to put your bank name, which is the full name, the field is not long enough and it cuts it off. So even the ATO doesn't allow us to put the full name in there. They have it in their other back-end systems, but anyway, they are aware of this issue, and one day they'll fix it, I'm sure.
Oh, wow. Okay. Sure. Can I ask one more question?
Sure.
Yeah. And this is, you may, I don't know, let me know if I need to speak to someone like one-on-one, because I'm very early on this and still clarifying my thoughts. But there is a thing to do with, it's like a package, like a crypto bot package that I'm interested in. I've made inquiries and they tell me that it's fine to use my SMSF for it and they can invoice my SMSF for it. But my question is, I was obviously watching the introduction video and Cass, you were saying right at the beginning, don't buy any financial training for yourself. Now, this particular package includes, one of the things that it includes is group training sessions and access to a community and email support and some other things around the actual trading bot. So how do I know, is this acceptable? Is it training, education for the sake of the SMSF? So is that an acceptable thing? to
So
purchase?
not if it's purely education, no.
Well, that's not the majority of it. The
Yeah.
majority of it is that it's got the trading bot who actually places trades kind of more or less on autopilot in the crypto. That's the biggest part of it. So it's not primarily training, but there's some training that you can avail yourself of throwing
Yeah.
in, if that makes sense.
Yeah, so Mary Jane might add this when I'm finished, but all of these things in the end become up to the auditor.
Yep.
So you can certainly do it, and the less detail the invoice has got on it, the better. If the invoice just says for the trading bot, doesn't
Yep.
mention any of those other things, that's better. If you get an auditor, and like the auditor has to be an independent party to us, and they have basically their neck on the line. If they make a mistake, the tax office can sue them, penalise them, deregister them. So they have to be very, very careful. In the end of the day, it'll be up to the auditor whether they say, no, we don't like that, we don't agree with you. And in that case, it's not a huge deal. Normally, they'll just report it. It's called a Part B qualification. They'll just put it on your tax return to the tax office that, look, you've done something that they don't agree with. You normally wouldn't get any sort of big penalty or breach or anything for such a small deviation. You just get a red flag on your file. Or otherwise just avoid it and pay for it personally.
Yeah, I'll just add to that. I've had some other people inquiring about this sort of thing, and because it does include the training, the feeling is that it wouldn't be accepted by the auditor. And what I would just comment is that the more and more people who are doing this, it might actually then raise awareness, like Bitcoin was at the beginning. The ATO didn't pay any attention to it, and then they caught up and they went, oh, hang on. So I've seen a little trend in more and more people be looking at buying these packages, and it is clearly not just investing. There's a whole personal element to it. So just a flag that it may get on their radar, in which case it may not be worth it. If there's a way that you can personally buy the training yourself separately, and then, or based on whatever you've learned there, buy the crypto out of your SMSF in the name of the SMSF, that might be a way to get around it.
Okay, so yeah, if I can separate it out and kind of just say, look, I just want the bot, but don't include the other stuff. Is that sort of what you're saying?
Yeah.
I mean, I don't know if that's possible, but I could ask. How do we stand with access to a community? Is that considered training too? Like if you can sort of ask questions in the community
so
and get
any personal benefit, the ATO will not allow any personal benefit. So clearly having access to a community is a personal benefit to you.
Is that because I could use the knowledge for myself even though I choose not to?
Yeah. So, for example, for example, people say, oh, I'd like to buy a book about SMSFs, or I'd like to buy a computer just to run my SMSFs on. Yeah, even if you swear blind that you're not going to use it for anything else, the ATO will say, well, we don't care. There is potential for you to use it in a personal sense. So,
yeah. Okay. Is there a situation where I could run? I don't know how this works. Sorry, run this past the auditor and sort of say, hey, this is the specific thing. Like, can you give me a yay or a nay? Like, is that possible or not really?
No, they don't like doing that because basically it's their time. They would have to go away and research it for a few hours. I could ask the audit, like if you're willing to pay for their time for the answer, I could ask her whether she will. Because it's something that they consider. It's part of their audit, and they charge you $400 or $500 for the audit. They will then consider all those issues and deep dive into the research, but they're not going to do it for free.
Okay. With the bloke that I've been contacting there, where I asked the question, I said, can I use my SMSF for it? And the answer was a straight yes. I mean, what do you make of that?
So, yeah, I agree. When I'm hearing Mary Jane talk, Mary Jane's talking the line that Peter and back in the office, because they're hearing it from the ATO and the auditors straight from the source. I agree with you. It's freaking ridiculous. You're buying that software to trade to make money for your SMSF. So it's simple, but this is what the world we live in. It's all fine line, red tape, blah, blah, blah.
Yeah.
So, I mean, if you have no funds to do it yourself and you really need to use the super money, personally, and this isn't advice, this is me personally, I get my back up the wall when the ATO makes stupid rules like that. I would pay for it out of the SMSF and argue when the time comes.
Yeah, okay.
And how much is it? How much are we talking about?
$4,000, but I can't pay personally, so I'd have to use SMSF.
What does $4,000 give you though?
Yeah, well, so it would be the I've got it here. It is the so it's the 4 of those bots that trade for you. It's got access to email support for 12 months, live group training sessions, 12 months access to a private community. Sorry.
That, in my opinion, is, in my mind, is all you're going to use to benefit the SMSF.
Well, that's right. That was my thought too, but I just don't want to be penalised.
So when it comes to the penalties, and once again, this isn't advice, but it's my experience. I've been a tax agent for 30 plus years and worked for the tax department for 11 years. So I've had a lot to do with the tax department. This sort of thing, the worst case scenario is the auditor qualifies your SMSF and says you've done something a little bit that they don't agree with. 90% chance the tax office don't even do anything. It's only such a minor breach. The worst case scenario is they come to you and ask you why. You submit your explanation that you're not trading personally, that this is all for the SMSF, blah, 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 blah. The worst case is like a slap over the wrist from them to say, don't do it again. And what they do in a breach like this, like I basically ran my super fund when I was bankrupt, which I shouldn't have. I ripped about 300,000 out of the super fund because I needed the money, and didn't lodge for 6 years. So
this is all being recorded, Cass.
I know, but on record, so tax office know this. So I was the worst client of the firm.
Yeah.
When they had to catch up with me, and then because I had to lodge once I was no longer bankrupt, then I could because if you're bankrupt, you can't even have an SMSF. So what I did is just not lodge for 6 years while I was bankrupt. So once I was not bankrupt, I lodged everything and I said, oh, look, sorry, I stole 300,000 from the fund and I can't pay it back. All they did to me was put me on a loan agreement. Well, I had to submit the resolution myself and say, look, I'm willing to enter into a loan agreement and I'll pay my super fund back over the next 3 years with interest. So no penalties, nothing, because at the end of the day, it's your money, it's your super. They just want to make sure you're doing the right thing for your future. So what I'm saying is there's hardly any likelihood the tax office would do anything. If in the remote possibility they did, they would likely say to you, you need to pay that money back, but, we'll give you an acceptable time frame and you'll pay it back to your super. So that's your risk. There is always a risk of penalties, I do have to say that, but I've never seen them applied in such a small, trivial issue.
Okay, so I guess when you said a maximum penalty up to half the value of your super fund, that kind of freaked me out a bit.
I have only seen that be applied in one case in 25 years of doing SMSF, and it was a serious case. I've heard about a few other cases, and once again, they're serious cases, like someone's ripped the whole balance of the super out and has no way of, for no real reason, they just did it and they've got no way of paying it back. Like, that's when they get really serious.
Yeah. Okay. Yeah. I'm not really sure what to do. No worries. I will make inquiries whether it can be pulled apart.
What I would also just suggest you do is the one document out of the hundreds of pages that you are given when you sign up is the ATO's trustee declaration. It's a 2-page document. Just read that. That's what I've been always told by the accountants, senior accountants, is that when you sign up for a self-managed super fund, and you sign that document, you're actually stating that you know how to manage it. So, and this is what was explained to me by a senior accountant, was that asking to buy training material on how to run an SMSF, which is different to what you're asking about, is a nonsense, because you've already signed saying you know the obligations that you need to do, and you're signing saying you know how to do it. So that's why in one case they weren't allowed to buy a training material, a book talking about how to run a self-managed super fund out of the self-managed super fund. By all means, they bought it by themselves. So just read that document, and then if it sits comfortably with you, then you can make a choice knowing all the background that Cass has just gone through.
Yeah, okay. Yeah, no, that's fine. Thank you.
Cass, you're silent.
No, also to add to this, and that's not just about this specific issue, but any issue. So it's good for you all to know. We only know, or the accounting team only know, and the auditor only knows what you give them on the paperwork. So using this as an example, if you go ahead with this, just give them a piece of paper that you've got to give them the invoice that justifies the expense.
Yeah.
And give them as little as possible. Don't go giving them a 30-page manual about these things, because then they're going to go, no, personal benefit. Give them as little as possible for any issue. You give us, the accounting team and the auditor, what you want them to see.
Yeah.
Because the only way they're going to pull up things is what they see on the paper. They may ask more questions and then it may come unraveling. But in the first instance, just give them exactly what they need and nothing more. It'd be like talking to police, only to ask the questions that you have to answer. Don't sit there going blah, 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 blah.
So the name of this package is just entitled Passive Income Accelerator. I mean, that's not very descriptive, so that might be okay without revealing a heck of a lot of information, really. Would you agree?
Yeah, I agree. And if you look at that simply, they'd say, well, yeah, income accelerating, it's SMSF expense, but that sort of vague term, the auditor probably will have more, but once again, just give them as little as possible more, try and satisfy them.
Yeah, if this thing, and this is sort of projecting into the future, but I've been following this information for some time. I just haven't been able to act on it. That's why I would like to use the super funds. If down the track I see that it's working for the super fund and I want to purchase it in my personal name as well, the same package, could I potentially do that? And then, obviously, so to keep them separate, myself and the super fund, can I still do that?
Yeah, absolutely. And that is really important for this issue and for anybody else that's doing the same sort of thing. You always make sure the name of your trading account is in the name of the SMS.
Yeah, that long one.
And if you go set up something personal, make sure that account is in your personal name and don't cross between the two.
Okay, but I can still have the same thing in my personal account as I would have in my super account if it's working.
Yeah, well, once again, the audit, we're not going to know about it in tax, and the auditor's not going to know about it. So
yeah, right. Yeah. Okay. Okay, fantastic. And now I realise you say, well, you're not giving financial advice or investment advice. Is there anyone that does that you can recommend?
So I love this topic as well. There's lots of fiery topics. Financial planners, the name is a misnomer.
Yeah.
Financial planner, I was a financial planner for 20 years. They give advice on share market investments and insurances. So when people say, I want to talk to a financial planner, most of the time that's not really what they want to talk about. I always joked financial planners are FP for financial planner, it equals flogging product. Because all they do is sell you a share portfolio and insurance portfolio. So I quit being a financial planner just when COVID hit, because there was no way in the world I was going to advise people to get into the share market at that point in time. I've always said it's going to crack real bad one day, real soon. So I quit being a financial planner. So I don't give financial planning advice because I'm not into shares anymore. What the sort of advice a lot of people think is financial planning advice is tax advice, which I'm fully licensed to give. Tax advice, mortgage advice, finance advice, property advice, business advice, company advice, trust advice, all of that, or just a general, what the hell do I do with my money, with what's coming in the world? Mm-hmm. That's all the stuff I'm licensed and qualified to talk to anyone about. Yeah. You book a private appointment on the website. I'm pretty hard to get because I'm sort of basically semi-retired. I'm supposed to be, but never worked so hard in my life. I've taken on a farm and a community, and
Yep.
not fun. But yeah, you can book in. I do have some appointments available each week, and we can talk about anything like that, and that is licensed advice.
Okay, so if I, because it's just the money's just hit and I'm like, what the heck? So I've got a rough idea, but if I just wanted to kind of sit down and just talk it over, that's the kind of thing you do.
Yeah, exactly. And the way we do and the way I've always done it is it's just a fee for service.
Yeah.
Where when you go to a financial planner, they are selling you because they're going to make a big commission based on the percentage that they get.
Yep.
I had a lovely lady a few weeks ago. She had 1.5 million locked up, and the financial planner was brainwashing her into investing in a portfolio. And she came on the appointment with me in tears, just saying, I don't know what to do. I don't really want to do that. And I'm like, well, you know exactly what to do. They're going to make about $200,000 a year from you, and you don't feel good about it. Get it out of them, get it in your bank account, and put it in gold and silver. And she did that. So I saved her $200,000 a year in fees. She put it into gold and silver, which went up 10%. She made $200,000, and I charged her $200.
Wow. Yeah.
That's what we do. Fee service. We just charge for our time, and then hopefully help people out.
So, and that's great. Like, I obviously realize your fee's bigger than, you know, maybe some other people, which is fine. But is, like, you know, when I get an allocated accountant once I've completed all the paperwork, so that person is not in the same boat with that kind of advice as yourself. Would you agree that's different, or could I discuss it with, you know, whoever I'm allocated to once the paperwork comes through?
The main difference between me and the other accountants is that I'm more broader, big vision. Where do you want to go? What do you do with your money? Trust, properties, companies, blah, blah, blah. The accountant that you get allocated to is 100% SMSF technical detail and law, which I'm slowly losing track of. So even when I give SMSF type advice, I say, but check with that accountant, because they actually know more than about me, because they are down to down earth, liaising with the tax department and the law all day, every day. So that's the difference. They are your SMSF accountant. I am broader. Yeah.
So the big picture stuff, it'd be best to book in with yourself.
Yes, exactly. And also the accountants don't charge for their time. It's part of the package.
Yeah.
So people that signed up as clients, you can email them about, you know, can I put in a contribution? Can I do withdrawal? What can I do? And all that advice is for you anyway. So why pay for me when they can do it for free?
That's specific question, technical kind of questions. Yeah. If I do book in with you, can I use the money out of the SMSF to do that?
Yes, I can invoice your SMSF.
Okay. Yep. Fantastic. All right. Thank you. Thanks very much.
Okay, Katja, I'll let Sue ask you her question. Sue, your turn.
Oh, me. Hey, Cass.
Yes.
Great to be on today, firstly. Thank you. Hey, Cass, I'm retired, and I spoke with Mary Jane the other day, and she knows my story. I'm just curious about how it works. Is my current super would go from pension to accumulation to be sold and transferred over into the SMSF, and when it's transferred over, it would be cash, wouldn't it? And then
and Mary Jane can probably take this one because she's doing a lot of that at the moment. Give me a break from talking, and I'll chip in if I need to.
Okay.
That's what we talked about. That's right.
That's it. Yeah. And at the moment, you know, my life is pretty simple. You know, I've got a pension coming out of the super fund. I don't do a tax return. I actually just fill out a form to get a few dollars back on some dividends. So what happens, I understand that the money is rolled over into the SMSF, and that's that money there, and I use it to buy. I'm not into property at my age. It would be bullion and whatever else. I don't know. I'm not sure. So that's my question as well. Bullion, crypto, and what else? And what I have on the side is some cash I have on the side and some bullion, you know, all of that now, like in my name. What do I do with that?
Oh my gosh.
Okay, so there's quite few questions in one with that. I'm just going to have to
So
put
I
a
did
notepad on that
actually,
one.
I did follow up with an email, Sue, I think, and dot point some of the questions you had, and I might have copied you in, Cass, on that and suggested that this
Yes.
was the starting point. An opportunity to ask broad questions about investment
You did.
strategy, and then maybe you need to have a personal one-on-one with Cass. So as I understand your question, you want to make sure that you've got an income coming through your pension once you've got an SMSF. So you've got a question around, you've got personal other assets, cash in the bank and other things. Is it worth putting them into the SMSF, or what should you do with them?
Yep.
Correct.
All right.
That's one
Yep.
question.
Generally, that's good. So I'm just taking my notes so that I can think. All right. So on the first one, and this applies for anyone basically over 60 that wants to start taking a pension from an SMSF. People often ask me, well, if it's all locked up in gold and silver, I'm not getting a dividend anymore. I'm not getting interest. I'm not getting rent on a property. I'm not getting dividends. How do I get an income stream? So when you are 100% invested in gold and silver, yes, it doesn't give an income stream. So what you have to be prepared to do is think about, well, how much do I need per week or fortnight or monthly, however you budget? How much do I need to live on? Let's say I need $1,000. So I need $52,000 a year from the super fund. Therefore, I'm going to leave that amount in cash and not put it in the gold and silver, and I'm going to draw it down every month. When it gets to the point where I'm running out of cash in the bank, I will sell more of my gold and silver and put the cash in the bank. And what you're hoping for is that gold and silver continues to do what it's been doing at the moment, which is skyrocketing. So therefore, you are getting an income stream. It's just coming by way of selling the gold and silver. So that's that side of it. In your super fund, it's a very technical thing, so I won't go into too much detail, but when the rollover goes in, it will go into what's called an accumulation account. Because you're over 60, I'm presuming, and retired, the accountants will pick up on that and they will put it into pension mode. You don't really have to do anything about that. The accountants will be in contact with you when the time comes, or you contact them and say, I'm going to draw down 500 a week, and they'll do all the paperwork for it. Nothing you have to do. We just literally tick a box in the back of the computer system to say you're now in pension mode. So having said that, it is very, very good to get assets into super, because what I heard you say is that you're not lodging a tax return at the moment, or if you are, it's just a very simple one because you've just got a bit of dividends and interest. You're probably below the threshold. That stays the same with SMSF. Like, the pension you draw from the SMSF is tax-free. So nothing changes in your tax situation at the moment, nothing. But you might want to put that's into the super fund. So for those that have looked into SMSF at all, after age 60, and we put you in pension mode, all of the income becomes tax-free. So if you're making gains on gold, silver, and crypto outside super, which I'm thinking you are because you said you've got it outside super, that's all taxable. So if gold skyrockets and you make $100,000, great. You're now taxable on a $100,000 gain in your own name. But if you transfer all that into the super fund, it'll all be tax-free. So really good reasons to transfer assets outside super into the super fund. To do that, there is a whole lot of contribution rules. You're best off talking to your allocated accountant, or Peter, the supervisor, can also, if you haven't got an accountant yet, you can email her, and she can talk you through exactly how much you can put into super and how to do it.
Okay.
A lot. I said a lot then, I know.
No, that was really good. It was quite relevant to what I was thinking with my questions. I think I have so many questions.
That's okay. That's what we're here for.
No, I'll let that go at the moment to get my head around that. Like Jane said in the email, I need to follow through and just get some more
And
information. And
I
I just need to keep my life simple.
Yeah, you could book a one-on-one with me and I'll talk through it simply and tell you what steps to take. Or you can also liaise with the accountants in FFS to get the technical answers from them.
Okay, thank you.
All right, Sue. And you can always ask another question later if something comes up. Katya, you've got your hand up again now.
That's what I'm doing. Okay, so at the moment, the money that's come across rolled over is in the cash management account. Am I right that for the time being, before I invest it further, that I would be best off to just move it into the income, whatever it's called, accelerator or whatever account?
Yeah, and that's an easy transfer. It just gives you 4.65% interest instead of 2.65% interest. And if you ever want to move it back to buy an asset, you can instantaneously transfer it back into the normal cash management account and do the external payment from there. But yeah, if you're sitting on any amount of cash over a couple of $1,000s in your SMSF bank account, it's best just to shove it into that little side pocket accelerator account.
Yeah, fantastic. And do I need to tell my normal accountant who's been doing my private tax returns up until now, do I need to tell them that I've got this SMSF set up now, or is that none of their business? How does it work?
It doesn't really have any, I can tell from your voice that you're not over 60. Might be wrong, but it has no relevance on your personal tax.
Yep.
Unless you make a contribution that you want to claim as a tax deductible contribution, which you can. Everybody here listening, you can contribute up to, is it 30,000 now?
This year it's 30,000, yeah.
Every year. That also includes your super guarantee amounts if you're working with somebody. But you can put up to 30,000 a year in and claim it as a tax deduction. So somebody mentioned a capital gain earlier on crypto. That's a really good thing to do. If you make a big capital gain, or let's just say you're on a big income and you want a tax deduction, you can put up to 30,000 per year in and claim it on your tax. And if you do that, yes, you need to let your personal tax accountant know that you've done that. We do personal taxes if you want to bring it all to us and have it all under one roof.
Yeah, I might just do that. So at what point do I need to tell you that? Is that just before tax time or?
Yeah, before tax time. So if you've done your 24 tax return, don't worry about it until next year when it's tax time. If you haven't done your 2024 yet, would let us know straight away so we can take it over.
Yeah, done it already. Thank you. And with the gold and silver ratio, are we still at the moment sitting at 50-50%, 50-50 as a wise choice? Is that what you're going with at the minute?
I have been for some time saying 70-30, 70% silver, 30% gold. Is that what I've been saying, Mary? No,
so
I haven't.
Originally, 2 years ago, that's what you were saying. Then you flipped to 50-50. So where are you now, Cass?
50-50, but I haven't updated. Like in the last week, it seems that silver is doing a big hike up. But we think it's still got, from what Ainsley Bullion publicised, we think it's still got quite a bit to go. So still 50-50. There'll come a time, hopefully in the future, where maybe it's time to consider the reallocation back to 70-30, 70% gold, 30% silver. We will communicate, and Ainsley Bullion will start putting out things and we'd put out things. We can't advise you to, we can't ever say this is what you should do, but we can just put out information that is leading down the path of, look, silver's skyrocketed, it might be time to switch now.
Yeah, fantastic. And
so can I just one comment on that? It does also, so if you're not the sort of person, I'm not saying you're not, but if you're not the sort of person where you sort of actually want to pay attention to what's going up and down, then maybe just sort of preferring gold over silver. Silver does, like in 2012, silver had a peak and then it does a cup and handle shape. So then it goes right down and it's just gone above that height again. And that's the cup. And then it does another little spike, which is called the handle. And then it does the cup and handle again. But it's not instantaneous. So if you're paying a little bit of attention to what we say and others say, then you can sort of keep up with it. But there are people who like to set and forget and not think about it. So if you're that sort of person, then maybe gold goes up and down, but it tends to just keep going up like that, and it goes up and down along the way. So there are a couple of things to think about. But it's interesting. Once you start looking at it, then it's a bit like you need to get a bit of more. Need to get another hit, and it's like, I need to see what's happening. So you might not be interested to start with, and then
I'm happy just to copy, Cass, to be perfectly honest, so 50-50 is kind of the go at the minute, right?
Yeah.
I'm actually just texting Ainsley Bullion as we speak. And for anyone that's got money in the bank, like, this isn't advice, but at the moment I'm texting Ainsley Bullion to clear out my bank account and put it all into unallocated gold and silver. And I'm doing a 50-50 split just because of what's going on. I mean, I don't know if anybody wants to be depressed or not, but if you are looking at the headlines at the moment, I'll just share it. Don't want to make people depressed, but North Korea launching 7 ballistic missiles. Zelensky's forces to attack Kim Jong. China unveils new electromagnetic weapon modelled after the Death Star. War looms as North Korea ramps up nuclear program. Ukrainians hit the North Koreans. And we've got the election today. So I'm just cleaning my bank account out and putting it all into gold and silver. Just letting people know.
Yeah, appreciate that. Thank you. And it's funny you mentioned the unallocated, because that's exactly the path I was going to go down. There's just, and sorry to be vague, but there's something that I was listening to, and it was a live thing, so I don't know if I've even got the right wording, but there was something along the lines of, make sure that if you invest in gold and silver, that you do it the right way, so that not multiple people are taking claim to the same kind of money. If I go unallocated, is there any risk of that?
Look, I have progressively over the last year or so backed away from storing it at home, because I realised, me being live on podcasts like this saying your money, gold and silver, store it at home, I'm like, oh my God, I live on a farm, anybody could come and rob me. So I've moved it all into vaults, and more I've just been giving it in the unallocated pools, because it's quick and simple. You put it in their pool, you need it back 4 weeks later, they sell it out of the pool, give you the money back. There's no physical handling. I trust Ainsley Bullion. I've dealt with them now for 2 years. I've been to their vaults. I've seen it's all there and it's all recorded. They stock take it every single day. So I'm more than happy with the unallocated pool.
So you
said
don't.
That,
Sorry.
But honestly, if World War III breaks out and we're going into martial law and 10-minute lockdowns and you can't leave your road, and I might, if I could, get to Brisbane and get it all out. Because if we're going to that nth of the breakdown in the world, I probably do want to store it if I can.
You would, so at any point, if you can go from unallocated to, okay, I want to physically take it out, you can do that at any point? Yeah.
Give them a little bit of notice. They like a little bit of notice, like at least a day, but they'll do it anyway if you turn up. But preferably if it's a large sum, give them a day's notice. So they can change it all over and have it there ready for you to pick up.
So your understanding is they have a physical gold equivalent value, the physical value that they're holding for you. If it's $100,000 worth that I buy, they're physically setting that aside. It's not just a number, right? So only I could claim it.
No, they're physically setting it aside. ABC Bullion is in trouble at the moment. It's on the news because apparently their unallocated pool is so rigorous. But Ainsley,
so you're cutting out there. What was their ABC thing?
ABC Bullion have been on the news lately. Their unallocated pool wasn't properly audited. They're not saying anyone's money, but they just weren't doing it as well as they should. But Ainsley Bullion, I do verify them and say that I trust them fully.
Okay, fantastic. Thank you.
All right, it's 1:26. Sue, you had another question, or was that your hand up from last time?
Quick question. I hope it's a quick question. Because with the cash money, I've got sitting there a few tens of thousands of dollars of money, cash sitting there. If I went today and said, okay, I put that into, into bullion, into maybe the unallocated pool, or just buying bullion, and I'm not in a self-managed super fund, so that would be in my own name. And if I did, then when I want to transfer it over, say in a couple of months' time, I just need to sell it and cop the capital gains tax on it.
Yes, correct. And if you're on a low income, because you're only getting the pension and the gain, this gain, your only income above the pension, the tax on it will be very, very low.
Right. Okay.
Yeah, and it's better to make the gain and have an extra 20, 30,000, but the tax on it will be very, very low. And as I said, for anyone ever selling an asset, capital gains is one of the easiest tax to not avoid, but there are things we can do to reduce it. You need to speak to somebody, get some advice before the financial year closes, because after it closes, no, there's nothing you can do. But
too late.
Before the year closes, or preferably if you're thinking about selling an asset that's got a big gain, book an appointment, and we can help you minimise the gain at the time.
Yeah. Okay. All right. Thank you. Well, that sounds like a wise thing to do. Like you said, you're going to just cash it in and buy some bullion at the moment because of what's happening out there.
Nuts.
All right. Well, our next free group Q&A is Thursday, the 21st of November at 6:30 in the evening. That's Australian Daylight Saving Times, New South Wales or Canberra. So it'll be 5:30 in Queensland, and I don't know around the rest of Australia. I apologise. You can check that. The information is always on our website, and we do send out reminders on our social media and newsletters. So keep your eyes on those. Thanks very much, everyone.
Thanks, everyone. See you again.
See ya. Bye.
Thank you.
Thank you.